Hello everyone. Welcome back to our channel, where we explore the fascinating world of finance and investing. In a rapidly evolving world, the financial industry is no exception to change. Among the various sectors, the mutual fund industry holds a vital position, acting as a catalyst for economic growth and wealth creation. In this video, we delve into the future of the mutual fund industry in India, comparing it with other developing nations. Join us on this journey to explore the possibilities and challenges that lie ahead. So let's dive right in. To comprehend the future, we must first examine the present. The mutual fund industry has seen tremendous growth in recent years, both globally and here in India. Currently, mutual funds manage billions of dollars in assets, catering to a diverse range of investors. Over the past decade, the assets under management of the Indian mutual fund industry have witnessed significant growth. From a modest base, the assets under management has soared to new heights, reaching a remarkable milestone. Industry asset under management has grown 5 times in last 10 years, from 8 trillion rupees in 2013 to 41.62 trillion rupees, a CAGR of 18%. The total number of accounts, or folios as per mutual fund parlance, as on 30th April 2023 stood at 14.64 crore, 146.4 million, while the number of folios under equity hybrid and solution-oriented schemes, wherein the maximum investment is from retail segment, stood at about 11.69 crore, 116.9 million. The mutual fund industry has attracted significant foreign direct investment, boosting the country's economic growth. In the past 5 years alone, India has witnessed a staggering 62% increase in FDI inflows, reaching an all-time high of $81 billion. The mutual fund industry in the United States is the largest and most developed in the world. With a market size of trillions of dollars, it offers a wide range of investment options across various asset classes. The industry has seen a trend towards passive investing, with index funds and exchange-traded funds (ETFs) gaining popularity. American investors often have a long-term investment horizon and are generally more risk-tolerant. In the United Kingdom, the mutual fund industry is well-established and highly regulated. It boasts a diverse range of investment products and strategies, catering to the needs of retail and institutional investors. The market has witnessed a growth in sustainable and socially responsible investing, with increasing emphasis on environmental, social, and governance (ESG) factors. British investors tend to be more conservative, valuing stable and income-generating investments. Germany has a robust mutual fund industry, known for its emphasis on risk management and capital preservation. The market is dominated by open-ended funds, and investors often prioritize fixed income and balanced funds. Germans tend to have a cautious approach to investing and are inclined towards stable, long-term returns. China's mutual fund industry has experienced rapid growth in recent years. With a large population and a rising middle class, the market has enormous potential. Chinese investors are increasingly seeking investment opportunities in mutual funds, particularly in equity funds and money market funds. Technology-driven platforms and mobile apps have played a significant role in expanding investor access and participation in the industry. These international locations represent the global competition and the diverse dynamics of the mutual fund industry. Each country has its own unique characteristics, regulatory frameworks, and investor behavior contributing to the overall evolution of the industry on a global scale. As we can see, the mutual fund industry has become a significant player in the financial market. However, what does the future hold for this industry? Let's explore. One key aspect that will shape the future of mutual funds is technology. We are witnessing a digital revolution in the financial sector, and mutual funds are no exception. Technology has made investing more accessible, streamlined, and efficient. Online platforms and mobile applications have empowered investors to manage their portfolios with ease. Technology continues to revolutionize the financial industry, including mutual funds. In India, as well as in other developing nations, the integration of technology has significantly impacted the mutual fund landscape. With artificial intelligence, machine learning, and robo-advisors gaining prominence, investors can now access personalized investment recommendations based on their risk tolerance, goals, and preferences. Another significant trend that will shape the future of mutual funds is sustainable investing. Environmental, social, and governance (ESG) factors are increasingly being considered in investment decision-making. Investors are seeking funds that align with their values and focus on companies that promote sustainability, ethical practices, and social responsibility. As society becomes more conscious of environmental and social issues, mutual funds that prioritize ESG factors are likely to gain traction. This presents a unique opportunity for investors to support positive change while potentially generating attractive returns. Now, let's compare the future of the mutual fund industry in India with other developing nations. We will focus on three key aspects: market potential, regulatory environment, and investor behavior. As the global economy evolves, emerging markets are becoming key players in the mutual fund industry. India, with its young and dynamic population, boasts immense market potential for mutual funds. However, other developing nations, such as Brazil and China, also exhibit significant growth prospects. These countries have vast populations and emerging economies, attracting global fund managers and investors. In India, SBI Mutual Fund, ICICI Prudential Mutual Fund and HDFC Mutual Fund are the top three asset management companies, collectively garnering 17 lakh crores in last 30 years. In 2016, Mahindra Mutual Fund was launched, and today its asset base is more than 13,000 crores, one of the fastest growing mutual funds. You can see an exponential growth these asset management have shown in last decade. While these markets present exciting opportunities, they also come with their own set of challenges. Regulatory frameworks, market volatility, and investor education are areas that need to be addressed for sustained growth. Nonetheless, mutual fund companies are actively working towards tapping into these markets and diversifying their investment portfolios. In recent years, regulatory reforms have played a pivotal role in shaping the mutual fund industry. India's Securities and Exchange Board, SEBI, has implemented various measures to enhance transparency, protect investor interests, and encourage innovation. When it comes to regulations, each developing nation has its unique approach. India's SEBI has been proactive in implementing reforms, striking a balance between investor protection and industry growth. Similarly, Brazil's Comissão de Valores Mobiliários, CVM, and China's Securities Regulatory Commission, CSRC, have taken steps to foster a conducive environment for mutual funds. Investor behavior plays a crucial role in shaping the future of the mutual fund industry. In India, retail investors are increasingly embracing mutual funds as a wealth-building tool. However, the risk appetite and investment preferences of investors in other developing nations may vary. Brazil, for example, has a culture of fixed-income investments, while China's investors are actively exploring both domestic and international opportunities. As we conclude this discussion on the future of the mutual fund industry, it's clear that exciting times lie ahead. Technological advancements, sustainable investing, and expanding into emerging markets are just some of the factors that will shape the industry's trajectory. Mutual fund industry in India is more than just numbers and statistics, it's a testament to the indomitable spirit of the people. It's the story of dreams realized, of lives transformed, and of a nation rising to new heights. Remember, investing in mutual funds can be a great way to grow your wealth over time and achieve your financial goals. However, it's essential to conduct thorough research, understand your risk tolerance, and consult with a financial advisor before making any investment decisions. Thank you so much for joining me today to explore the future of the mutual fund industry. I hope you found this video informative and insightful. If you liked the video, please share and subscribe, and goodbye.